Welcome to the Cheat Code Corner, where we hit you with the cheat codes to help you advance in the areas that you care about. What's good, everyone? I'm your host, DC, and today we got a new episode with my man, Ignacio Merman. This guy is a real estate investor, CEO of SteelBlock. Super excited for him to jump in. How are you doing, Ignacio?
Damian, how are you? It's a privilege being here. And again, thank you for inviting me to do this call. And I'm ready to start answering your questions.
Are you ready to jump in already? Good, man. I tell you, I gotta tell you, Ignacio, I'm really excited for you to join because you're in a part of the business that I do not know much about at all. I mean, everyone knows a little bit about real estate, but the other side of it, commercial as well as like this residential commercial type of side, is something that's new. And real estate, obviously, everyone knows about wealth creation and wanting to invest, but you do a different side of it. And so that's really why I'm interested to dive in and ask you some questions about it, because it's an area that I don't know about, but it seems to be kind of lucrative.
It is lucrative, and it probably is one of the best ways to create wealth. You have to be a little bit patient, right? It doesn't create wealth from one day to another one, and you don't become rich from one day to another one. Mm-hmm. You have to have some discipline. You have to be strong. You have to follow a little bit your guts in a certain way, mm-hmm. but also you have to be very critical in your analysis. Yeah. In Excel, every business model works. Mm-hmm. Outside Excel, it's a different thing.
So then let me ask you, let's start from the beginning. I mean, you, so CEO and you oversee SteelBlock. And so you're in real estate investment, but it's a different kind of real estate investment. It's not the I buy a place and then I rent it out type of place, right?
I mean, it's the same way. I mean, the truth is that what we do is we buy buildings. For example, in this case, we can buy, 200 apartment complex, and you rent them out. Now, the money is not 100% from myself, that you rise up that money with investors. And that investors are probably, somehow wanted to have exposure into real estate, but also at the same time, they don't want to go through the hassle of being or having to take care of renting them out themselves or paying the staff or stuff like that. And at the same time, they want probably somebody, or they need somebody that professionally manages their money. So in that case, people or maybe companies like me are in there in order to be able to invest and have that exposure or give that exposure to investors. So that's how we are eventually born. And at the same time, when you tend to buy, let's say, 200 apartments in one complex, somehow you have micro exposures to 200 different tenants, 200 different credit risks. So somehow these kind of people that want to invest, let's say, for argument's sake, $50 to $250 to $300,000 are automatically diversified instead of buying one single condo and having the exposure of the plumbing blowing out, and there's a ton of different stuff. But probably that guy and what we do, and it's typical in our industry when you manage professionally, you need to have a starting point and you need to have a selling point. Meaning, okay, the business plan, let's say it's 5 years. So we know we have to buy, and then we know you have to sell at year 5. Mm-hmm. Mm-hmm. And if you cannot sell in year 5 because the market crashed, we can eventually extend it for 12 months. But that's it. Then if we need to sell, we need to sell. And we give the power to the investors to vote and say, okay, let's sell because we need to get out.
So let me ask you, and before, and I really want to understand how you even got started in this business. Because again, the only type of real estate that I always knew was residential, but it was more, you get some money from your parents, or you get some money somehow, you raise some cash, and then, you buy a place and then you kind of rent it out. So, I mean, how did you even get started in the real estate business? Because I was looking at your bio, and, you were head of acquisitions and founder and partner at Black Salmon. And it was talking about how within your kind of tenure overall, you've managed more than $2 billion in assets, which is crazy. So, I mean, have you been in real estate your entire career, or, because I know like you're an engineer by trade as well, right?
Yeah, I mean, no, I wasn't born into real estate, to be honest, right? I was an engineer, probably optimizing the time of aeroplanes in ground for an airline, saying, okay, cargo airlines, okay, let's load it, let's unload it, let's load it, fly, fly, fly. And after that, somehow I got the opportunity to move into the real estate industry first, of course, as an analyst, and start understanding the business.
Okay.
But I was lucky, and I took a little bit of let's say, the first leap of faith. Entering into a company was very young. I was employee at that stage, number 3 on that division. So you have one of the partners. I was running the acquisitions, and another guy that was doing the asset management. So probably that was my first exposure to entrepreneurship. I was an employee, but I was working for a startup. And because of that, I learned a lot of the things that eventually you need to see, or you need to take care, or you need to understand when you're doing a startup.
Yep.
When you're in a startup, and it's absolutely very, very, very hard. But if you're driven, and if you know a little bit, I mean, how to manage the process, because everything is very learnable. I mean, you should do good. So really, I learned somehow in this company I learned how to start up a company into the real estate industry, right?
Yeah.
And it have different phases, but so I was kind of lucky, if you want to say, in that time, because I learned from it. I was not making millions and say, okay, let's do it. But there was a lot of knowledge.
Yeah.
Somebody else's money.
Yeah. It wasn't your money.
And I was absorbing all that information. And the company grew significantly. And I ended up buying close to $2 billion in real estate assets.
Wow. And
generated good relationships with a lot of very, very professional in the industry. And when you're young, I mean, and you're in a position like that, you absorb all the information that eventually you can.
Yeah.
And
I think you bring up such a good point about, being young, but also like gaining exposure to a specific industry or field through a startup. Startups, like I worked. So when I first started working, I was working at this big company. It was a Bill Gates owned company. There was 5,000 people at the company. And so, you're just a worker bee within that company, right? There's
exactly.
you know your role, and that's it. I ended up going and working at a ad tech company. And the ad tech company, even though it was still kind of growing, it had that like startup feel to it. It was a mature startup, only like 8 years old. In startups, you work hard and you have to wear a lot of different hats. So you're learning lots of things outside of your normal job description. And honestly, you hit the nail on the head, Ignacio. I learned so much about that digital advertising industry when I was in that startup that it was crazy. And I would have never learned that if I worked at a larger company in the same field.
Look, I mean, it's exactly as you said. I mean, and I don't know. I mean, when I was probably, I don't know, switching from a very consolidated company to a smaller company, like people were like, are you crazy? I mean, what's going on?
Right. Yeah.
But,
you're right.
And I mean, there's a ton of things that eventually we can touch here, because we're talking probably about the jumping moment where eventually you say, okay, we can move from this closer to a startup company. And even when you start your own company, as when I did, let's say, the last 2 years, it's 100% difference. You will always learn. And that's something you need to be able to realize, that when you do a startup, you will always be learning. And if you're on your own, you're going to be learning, because your startup needs to pivot, and you're going to learn what it's attractive to eventually to your clients, what is not. But if you want to be an entrepreneur, you for sure you have to have this willingness to learn. You have to have this willingness to say, okay, I'm wrong, but I'm ready to, I don't know, switch it and go. But you cannot start a company saying, okay, I know everything, let's go. Nothing, even in the same industry.
Mm-hmm.
You can, okay, I know everything, let's start. I know exactly. No, you have to start with, probably it's going to be tough. I kind of know where we are heading, but let's go. And that's it.
So it sounds like then it was, you did the startup, you got the exposure, a little bit of the understanding and relationships. Then after that, then you started the last company. So this is your second fund, right?
This is my second company into the real estate industry. And what was happening is when I jumped it out of this company we're talking to, I mean, I already had relationships and some knowledge of how to do it. Mm. And then I jumped it and I did my first mistake. And that's another thing that eventually an entrepreneur needs to understand is you are going to make mistakes.
Yeah.
You have to try to reduce them, but you are going to make mistakes. The probability of doing a mistake is 100%. So knowing that, I did my first mistakes and probably I chose my partner's wrong.
Was that the big mistakes?
Yeah, I mean, in what sense I chose it wrong? Their mind and their vision was different of what I wanted to do. Their vision was more about being able to raise up capital and manage a ton of money, when eventually you tend to make fees on the amount of money, the amount of money that you're managing. And I was more oriented into buy real estate that produces very attractive returns, right? But it's tougher to find the deal. But eventually, once you find it, it's something that that you're comfortable because you're bought it at a good price and you're gonna make money. That's the whole point. But anyway, so I ended up selling my partnership interest and I started my second company, which is where I am right now, and it's called SteelBlock. And I also, luckily, I changed from probably asset class, because inside the real estate, there are different asset classes. I was at that stage more oriented into office, probably some industrial and some retail. And now I'm 100% oriented into multifamily, what it is class D and C. So more what is called workforce housing.
Okay.
The good thing about switching is now with the pandemic, all the office segment is kind of shaky or is shaky. Yeah. I mean, nobody knows what's going to happen with the office space. It's not going to disappear for sure, but we're moving into a hybrid probably mode where you're going to be able to work from home if you want to, let's say a couple of days, and then you probably will need to go back to the office because the companies also need to create that atmosphere, that team feeling.
Yeah, they're not going to get rid of office space for sure, but you could see there's a lot of organizations that, like a friend of mine is working at a company and now he's kind of doing the digital nomad thing because the organization closed down their office. But on the flip side, you have Salesforce and other companies that are like, hey, listen, we're keeping our office space. We're just going to reimagine and adjust it. So it is definitely kind of it's the commercial real estate industry. It seems like it's going through kind of like a transformation, but the residential housing that you're talking about, like the workforce housing, I mean, people are always going to need housing, right? You know what I mean?
Exactly. People, they still need to sleep somewhere and be comfortable, and so anyway, somehow I said, okay, my vision needed to be where something was, more stable. And I don't know, I totally believe that I hit on the nail right now because I'm originally from Argentina. I have seen like high inflation periods. And after the pandemic, I'm seeing that the US and probably most of the countries have printed a ton of money. 40% of your monetary base have been printing the last 12 months. That is not going to be for free. And when it happens and stuff like that, then the wealthiest, separate with the, more poor class or lower income producing families. The separation is higher.
Mm-hmm.
And the people that are not suffering the most are still the lower income family because they are probably employees.
Yeah.
That they get adjusted their salary, behind the prices of everything.
Mm-hmm.
And that hurts them. And when that is produced, what it tends to happen is that it is more difficult for them to access and buy their own house. So they would need to rent. Mm-hmm. And if you have a good program and a decent quality building, your building is going to be full.
Yeah.
So that's eventually how it matches up with what we're doing. So we are renting to work for housing, right? So
I'm kind of curious though, like Ignacio, I mean, you start the business, you already want to be in real estate. That's kind of like your jam. I mean, how do you guys go about, raising the funds to be able to get these type of residential buildings? I mean, like you said, it's not your own money. So, I mean, how do you address that? How do you find investors, and what is that process like?
Well, I mean, having been in the industry somehow and for several times and having proved that I knew or that I learned how to buy real estate and manage them, for me, then it was easier to spin around and say, okay, now I'm on my own.
Mm-hmm.
And you always start with friends and family, people that know you and that they have been tracking you, and say, okay, I'm going to give the opportunity to this guy because he has done it already. Any investor, even your friends and family, when they want to invest in something and they want to eventually see a return at the end, they are joining a cloud of dots. The more dots you have, because you have done it in the past or whatever, is the easier for you to raise up capital eventually. And saying, because look, there's all these dots, I have done it in the past, this is a straight line in order go from A to B. And they say, yeah, okay, it is easier. Now, if I somehow jump and I go 100% into the tech building, my cloud of dots is going to be much thinner.
Yeah.
So for me, raising up capital would be tougher. Like, okay, what does this guy know about this? I mean, there has to be a very full friend in order to say, okay.
Exactly. Here's $50,000. Here's what I'm hearing in Ignacio. It's one of the cheat codes that you had was you started out in a startup, which kind of gave you that exposure and that knowledge. It allowed you to establish relationships with folks, right? So that you can have a track record. You can have a track record, right? Then you said, okay, well, I'm going to start my own thing using the previous relationships and knowledge that you already had. So you had the credibility.
Exactly.
Right?
So, a little bit, right. It's not the same, but yes. Yeah. You nailed it. That's the path.
That's the path and the trust. And then as it relates to when you starting, right, and finding money, then I also love that too, is you leverage the existing network that you have. So that's mom and dad, cousins, friends. It's like, listen, you guys, and that's where it starts, right? Like if you want something, you tap on the relationships that you had. And it's funny because with cheat codes, the cheat code corner, that's exactly what I'm starting out with initially, right? Is I'm starting out with the people that I know, like you and some of my other friends, my active friends and entrepreneur friends. And it's crazy because if you do have that support, you can kick things off, right? You can really springboard into something well by leveraging the existing network that you have. That's why it's so important to never burn bridges and to really make sure that you kind of nurture the relationships you have.
It's true. And there's other thing that, you need to contemplate. In my path, when I left my previous companies, I was buying deals in the millions of dollars, size. Now, when you go on your own and you come from all this knowledge and probably you come a little bit cocky, hey, I bought all this stuff.
Right.
You need to understand that you need to go all the way low and say, okay, because an investor doesn't only see that you have done it in a bigger scale, is that now your hands are dirty and you know exactly the micro operation, eventually how to solve those stuff.
Yeah.
And that has a ton of value.
Yeah. Let me ask you though, and I think you bring up a really good point, something that, it's probably only unless you do it do you realize it, right? Which is that I love the point that when you go on your own, right? And when you start your own business, even if it's in a business that for instance, you were doing the real estate at the startup fund, you were doing it somewhere else. Once you shift to everything on your own, now you're doing the paperwork. Now all the risk is on you, right? That is a different experience than when you're just doing a job for another company.
100%. You have to know that, and you have to be willing to do it. If you're not willing to go all the way to the micro tasks that don't do it, I mean, the probability of failing is probably higher.
Right.
But when you do everything in the middle and the company eventually you will grow and you will end up not doing those tasks anymore.
Yeah.
But having them done, first of all, you start to appreciate the guy that eventually is going to be working for you that is doing that task because you have done it. And then you appreciate that guy. And you need to you would eventually take care of that person more, right? And somehow it will help you create that team to put the correct guy in the correct place, to take care of the guy, to understand really what's going on. But you have gone through that phase, and you're growing this company slowly, and you're still learning because, again, when you go on your own and you're doing that micro task, you learn because you're doing it again, and you have to be willing again to go all the way to the very top. The investors like that, I mean, a lot, and the money eventually is going to show up because you have done it here. You know how big the company can grow, and now you're doing from the very bottom and slowly growing up. You're telling a story of somebody that has the guts that say, okay, I know how to do it. I'm going to do it again. And now, okay, I have $1 million. I'm investing in you because you have what an entrepreneur needs to have. And what he needs to have, I would say, is to be humble in some way and the willingness of always learning. I mean, even if you start on a company or on an industry that you know nothing, you have to be very, very, very humble and learn as much as you can. And being an entrepreneur is always, it's about learning, 100%. Yeah.
Well, it's funny too, right? Because why is it like, I think somebody asked Bill Gates, like if you could have a superpower, what would it be? And he said to read more, read faster, right? I mean, every single successful person that I know that is advancing very quickly or just advancing in general that has had success, all of them are readers. All of them consume content and information from high quality sources more than any of the other types of people that I know. I mean, they just love knowledge. And obviously the knowledge helps them to limit the mistakes, to forecast and understand what's going to come down the pike. So yeah, no, I completely get that. Let me ask you another question. We talked about some of the challenges and things that you learned, choosing the right people, being humble, starting kind of from the bottom, being a consistent learner. What is something that you would tell the 24, 25-year-old Ignacio who is just kind of getting into real estate or is interested in real estate and kind of wants to maybe start their own thing or start investing?
I mean, you need to have a little bit of patience. And again, understand that where you are at, it will always be a learning curve. That is, so don't get, over, excited. Okay, I need to start with my company now. I'm young, let's do it. Or take your time in order to learn. And you said, there's all these people that are successful, they tend to read a lot or whatever. I want to challenge that a little bit. You don't only learn about only reading, right? You also learn about doing and making mistakes. That's why if we go back to what we're talking about, is know that eventually you're going to make mistakes, note them down, and keep on moving forward. right? And try to mitigate and reduce that amount of mistakes. But you're going to make them. And you have to be very, very thoughtful about the mistakes that you made and keep on moving forward. That's it. It's an iterative process. You will get wherever you want to get. When I jumped into this and to my companies on my own, it was not about how much money eventually I was going to work. It was probably proving myself that I was capable in producing or creating a company that eventually could be able to grow. There's a ton of work in the middle. You will work hard. You will have to work hard in order to make it, grow. If not, everybody would do it. And also understand that there is value for somebody to be an employee. I mean, because I have to tell you, from me, I wake up and I think in my business. I go to bed, I think in my business. I go on vacation, I think in my business. And I live for that and I enjoy it, right? But there's also value in being an employee, and you can still be a good employee. And it's okay, 5 p.m., 6 p.m., I'm going to close up my computer and now I am going to spend time with my family.
Yep.
There is value to that, right? And acknowledge that. I mean, an employee can also have a good quality of life. And I feel like right now, like there is a ton of propaganda saying you have to be an entrepreneur, and entrepreneurs are maybe somehow the best. And if you're an employee, you are not free. It's absolutely bullshit. Mm-hmm. There is value being an employee, right? There is a ton of value being an employee. You have to understand if you have what it takes in order to be an entrepreneur and willing to take risk, make mistakes, and amend them. I think that's the key. And one last thing that I wanted to add, it's you can always choose if you want to be an employee and if somehow you want to be an entrepreneur, but you have to understand this. If you're an employee and you're young, your risk is very low. Now, if you're an employee and you get older, your risk is getting higher, and higher. Why? Because you get more expensive. The company will eventually be able to hire somebody with similar skills that is going to be cheaper than you, and eventually you're going to be. They can kick you out of that. But understand the curve you're in. Now, at the same time, if you're young and you go through the entrepreneur curve, your risk, right, as it was lower when you started an employee, your risk, if you start young, is very, very high. And why is very, very high is because you do not have enough knowledge, maybe, to start up on that. You still need to acquire that in order to eventually jump to the entrepreneur risk. Now, once you are in one and you keep on learning and you go through the entrepreneur curve, your risk as you get older reduces because, you have to kick out yourself eventually to that. So you have to understand which curve you are. You can switch from one curve to the other one, right? You can switch from the employee to the entrepreneur and maybe backwards, but understand your risks. That's the whole point. And I would suggest that be an employee first, learn, get that knowledge, and try to be an employee in a startup company, because eventually, as you said, you will wear a lot of hats and you will learn more than being, a specific position under Chevron, for argument's sake. And then jump whatever you feel you can jump.
Well, that provides the most flexibility, right? Like, I've always been a big believer in having options. And the best way to have options is to put yourself in a position to have options, which, you know what I mean? Which means, if you do start a company, whether it's, or not start a company, if you work for a company, you gain the knowledge, you can make a couple dollars in your bank account. And then you will have the flexibility to then do things during that point of time. That's the whole point of a side hustle, right? Is like, you know what I mean? Like, have the job, learn, and then if you want to do something on the side, if you really want to do it, then you could do it on the side. No one said you can't raise money. If you want to be in real estate, raise money on the side while you have a 9 to 5. But what I would say though, too, I do respect entrepreneurs. I love the entrepreneurial spirit. You have to grind and hustle. And there's a lot of cheat codes that come along with that. So, that you have to learn to be successful. So, well, listen, Ignacio, man, I'm so happy that you're able to hop on. We got one more segment. It's called My Power Questions. It's 5 quick questions that I'm going to hit you rapid fire. Just wanted you to give the best response possible. And it's designed to just give people insight into who you are and kind of like what makes you tick. All right. So you ready for them?
Yes, shoot.
All right, cool. How many hours of sleep do you get?
7.
What's your diet like?
Whatever is out there.
What is out there? You eat everything? All right. Favorite activity to unwind?
Go out for a run.
Go out for a run. You still running? I didn't know that.
Okay. I did, yes.
If you could have any superpower, what would it be?
Expand time.
Expand time. What is this, Doctor? What is it, Not Dr. Evil. It was some Marvel character that can expand time. And
it's the only resource that it's limited.
I like that. What are you currently reading or listening to?
I still hear a lot of podcast entrepreneur. They motivate me. And I'm reading a good of how to create habits.
How to create habits. Love that. Well, listen, man, it's thanks for stopping by the Cheat Code Corner, man. I wish you so much success. It's great to see, man, that you're continuing to build since we were getting our MBA together. So it's really great. Really appreciate you taking out the time. And I know having 3 kids, wife, time is limited for you, man. So I know this hour was important.
Damian, thank you for giving me this opportunity. And I wish you, of course, the best successes to you and to the people that eventually hear this podcast. And we have to give it a try and be able to learn.
Yes, sir. Thanks a lot, buddy.
Take care. Bye-bye.